From Marketplace, I'm Sabri Benishore in for David Brancaccio. The U.S. economy added 800,000 fewer jobs than we thought between the first quarter of last year and this year. That is according to updated data from the Labor Department. It's no crisis, but it does mean the labor market has indeed been cooling, maybe faster than expected. And it's yet another reason people will be dissecting every signal they can from the Federal Reserve on when it might cut interest rates. Federal Reserve Chair Jerome Powell will speak tomorrow at the Fed's annual economic symposium, which starts later today. Marketplace's Nancy Marshall-Genzer reports.
Investors are really hoping Powell will lay the groundwork for an interest rate cut at the next meeting of the Federal Open Market Committee, or FOMC, in September. But Ryan Sweet, chief U.S. economist at Oxford Economics, says Powell won't tell us too much.
I wouldn't hold your breath for a lot of clues on what the outcome of the September meeting is, or the November, or the December. He's not going to want to front run the rest of the FOMC.
The Fed released the minutes from last month's meeting yesterday. The minutes show some FOMC members acknowledging that a case could be made for cutting interest rates last month when they left rates unchanged. The minutes also said the, quote, vast majority of the committee members said that if the data continued to come in about as expected, it would likely be appropriate to cut rates at their next meeting. Sweet says they want to make sure the current high rates don't slow the economy so much that unemployment spikes.
But now the emphasis is really shifting towards ensuring that the job market remains strong. Because if the Fed waits to act until they start to see evidence that the labor market is cracking, then it's too late. And then odds of a recession increase quite substantially.
The Fed has two jobs, mandates from Congress, controlling inflation, but also keeping as many people employed as possible. And Sweet expects the Fed to lean into its employment mandate now after focusing on inflation for the past few years. I'm Nancy Marshall-Genzer for Marketplace.
All right, let's do the numbers. Dow, S&P, and NASDAQ futures are all up in the 1 to 0.2% range. The Dow futures up 36 points. The yield on the 10-year Treasury is 3.828%.
Marketplace Morning Report is supported by UKG. UKG is a partner that delivers HR, pay, time, and culture solutions designed to help build a great workplace for everyone. UKG, our purpose is people.
The U.S.'s economic prosperity in the future depends on innovation today. And one of the engines of innovation is the world of startups. That makes startups a target for venture capital investors and a target for spies. Foreign governments, largely China, but also Russia, are increasingly stealing U.S. intellectual property from startups by posing as venture capital investors or even through real investment. That is according to the National Counterintelligence and Security Center, which recently issued a warning to startups, urging them to be vigilant. For more on this, we're joined by Michael Casey, director of the National Counterintelligence and Security Center. Director Casey, welcome.
Thanks. It's great to be here.
So do you want to walk us through how this kind of espionage works?
Sure. Classic example is you're a startup, you're desperate for money, you're looking to expand, an investor shows up and says, hey, I'm thinking about investing a bunch of money. Can I see your intellectual property to make sure I'm making a smart investment? And the next thing you know, they've taken it and disappeared. There are a couple different ways this has happened, but that's sort of the archetypical example. And then your investor goes and sets up his own business in competition with you in some foreign country.
This threat has been around for a while, this kind of practice, but the NCSC issued an updated warning to the startup community this summer. What prompted that?
Well, we continue to see growth in this area. Our adversaries have shifted tactics over time. As you point out, this is not new. They've actually been doing this for a little while. But we see them doing it more and more and also moving to mask some of their investments. It's no longer just direct from the adversary country or through a person who's obviously associated with the adversary country, but we see it through third countries or masking themselves as even U.S. businesses.
Can you give us some examples of what this looks like and some companies that have experienced this?
Sure. There's a classic example, a company called Smiths Harlow, which is a British engineering company, I believe. And they had a foreign investor show up who was looking to buy the company for, I think, $10 million. And they actually put a down payment down of $3 or $4 million, at which point Smiths Harlow showed them all their IP. The investor then backed out of the deal. Smiths Harlow lost its British military contracts because they had this foreign investor, and now they have also lost their IP and they're in the process of going bankrupt. I think that's a pretty classic example of how this works.
And I guess we should say, like, showing an investor some amount of IP is kind of a normal thing in the startup world to some extent, right? It's just you don't expect them to run off with it.
Of course. It's just one. I mean, I think what we would say is know who you're talking to. Do some due diligence into those people who show up and are offering to invest in your company. And then two, think about what kind of risks you're taking when you're deciding how much IP to show. This isn't a don't take risks. This is a please take smart risks warning.
On the other hand, these investments are structured to avoid a certain amount of scrutiny. They could be coming from intermediaries in entirely different parts of the world. How is a startup supposed to see that coming, to sort of sift through, the legitimate investors from the suspect ones?
Admittedly, this is a difficult subject. I think if your investor shows up and seems to have complex ownership, where it looks like it's an investment through an intermediary, where a company, when you Google them and they seem to have re-domiciled in the United States, having just been in Hong Kong a year ago, these are all sort of trigger warnings. I think that a lot of these companies, though, have either venture capital firms associated with them or private equity firms who have also invested. And my guess is those guys don't want to see their investment disappear either, and would be somewhat helpful in this regard.
Do you think people have an understanding of the scale of the industrial espionage, particularly coming from China?
I think they're starting to. I think when we and others started warning about this, whatever was 5-7 years ago, the reaction was typically something like, oh, really? Is that happening? And now it's much more of a, tell me how it's happening and tell me how to protect myself.
Michael Casey is director of the National Counterintelligence and Security Center. Thank you so much.
Thank you.
In New York, I'm Sabri Ben-Achour with the Marketplace Morning Report. From APM, American Public Media.